Welcome to Capital Connect, a podcast from Monark Markets dedicated to the most timely conversations in capital markets. My name is Ben Haber, and I'm the co-founder and CEO of Monark. On each episode, I sit down with the investors, operators, and builders who are closest to the issues defining modern finance. Our conversations center around three core questions: 20 minutes per episode, and a genuine exchange of ideas. Whether you're managing client capital, building in fintech, or allocating at an institutional level, Capital Connect is designed to give you the perspective that actually matters. Joined today by Viram Shah, the co-founder and CEO of Vested Finance. Vested is a global investing specialist for Indians across the world. With more than $1 billion in assets, they are pioneers of the international investing category in India. Viram, thank you for being here today.
My pleasure, Ben. Thanks for having me.
Absolutely. I'd love to start with a brief background on yourself. Maybe give us the founding story of Vested and how you would describe Vested today.
Yeah. So, Vested started now. It's been more than 6.5 years, I think. It started when I was in the US studying on the West Coast doing my MBA. And, you have a lot of free time during the MBA. So I thought might as well use it to see if something comes out of it in terms of a company. I always wanted to start something, come from a family that's always been doing business. And this was, a personal pain point. Before that, I was in investment banking with JP Morgan, covering a lot of global companies. So I understood them very well in India. But then when I tried to invest in them, my local broker told me there's no way you could do it. And I was just looking back at my personal pain points while I was there in the US. And I, at the same time, was also seeing a lot of my classmates, in fact, paying for their MBA through the S&P 500 savings they had or the NASDAQ 100 savings. So, it felt like, why couldn't I access these assets? And that's kind of how it began. It was a sort of a bit early in terms of there was no category as such in India for folks wanting to invest internationally. And so a lot of the time we had to spend was towards creating that category, educating folks, also building a lot of the products that did not exist at all in terms of like money movement, in terms of our KYC ML stack. So all exciting. Today where we're at is we essentially are a global investing focused platform for Indians living in India, Indians living globally. That's the area of focus, and that's the niche we've realized that we do best, and that's what customers love us for. We provide access to multiple asset classes. So started largely with US public markets, but over time, as you know, expanded into private markets, expanded into global funds, managed portfolios, and we'll continue to do more and more.
Amazing. It's been exciting watching you guys expand into new asset classes. I thought the education platform you launched recently was super cool as well. Remind me what that's called?
GlobeEd.
GlobeEd. Amazing. Yeah. So I'd love to dive right in from your vantage point today. What do you see as some of the biggest challenges for Indian investors seeking to build a diversified portfolio, and especially as it relates to getting U.S. capital markets exposure?
Yeah, so we kind of break down sort of challenges or consideration points for our customers into multiple steps. So first is just you have to develop the awareness or the urge to be wanting to diversify your portfolio internationally. You would otherwise typically just have most of your assets, if not all, domestically invested. So the awareness aspect is number one. Number two is once you're aware, like I, for example, became aware while I was at JP Morgan covering global companies. That's what was my trigger. But post the trigger, you need to be able to have easy access, right? At that point, that access for me did not exist then, so I couldn't do anything about it. And then let's say you do have access. The third factor then becomes, what do you put into your portfolio? How do you build your portfolio? How do you manage your taxes? It becomes more advanced problems. So when we started, all three of these were problems. Now, I would say for the public markets, at least in terms of the US public markets, the middle layer, the access has been solved, and access includes two things. It's not just offering access to the public markets. It's also how do you solve the money movement rails, because that was something that never existed before. Like when we started, if you wanted to send $10,000 into your US brokerage account, even if you could open it, to send money was like a paper form. You had to pay ridiculous fees. It would take like 4 days. You would have no idea how the money is getting transferred or where is it. So it involves solving both access to the asset class itself, but also the rails in and out of that asset class. And so now I think over the last 4, 5, 6 years, we have been able to solve that. Uh, but I would still say that awareness is still a challenge to educate folks in terms of overcome your home bias, why you should be allocating a certain portfolio percentage of your portfolio internationally. That is a long process. I think it takes 5, 10, 15 years over time as slowly people become aware. And then the other aspect now is coming up more and more, which is, okay, I am aware, I have access. How do I build my portfolio? I don't know what kind of stocks, because I don't hear about the news all the time like I would for the local Indian markets, right? I don't hear about companies. There aren't enough people investing. So how do I build my portfolio? How do I manage taxes, estate taxes? All of that is becoming more and more of a question. So I think we will evolve in that direction as well as a platform. So this is more on the public markets. I think on the private markets, firstly, access was the biggest issue, and I think that's where working with Monarch has been great. That access aspect of things we could solve, and now I think it's been 6, 8 months since we're live. I think slowly within private market access also there is different things, right? One is the structure itself, but then the second is the supply. How liquid is the supply? Can you secondary sell? So I think all of those things, of course, we will work on together. The first part of access has been solved. I think now the more advanced problems will come later as we sort of get more and more people investing.
That makes a ton of sense. So that first level is awareness. It's then unlocked by access, and then it's sort of made more advanced or supplemented by portfolio construction. If you had to assign a percentage to each of those three categories in terms of how you feel the Indian market is, where you feel the Indian market is at today, what would you say is sort of the percentage awareness across the market, maybe the percentage of access that people have, and then maybe the percentage of people that are investors that are now interested in, really taking that next step into thinking about investing in terms of a broader portfolio?
I think from an access standpoint, it's largely been solved. But if you look at overall awareness, today, I would say 1 to 2% of the domestic investor invests internationally, right? So there is a big gap there. If you look at advanced economies, if you look at, for example, UK, Japan, about 40% of assets are diversified internationally. US is around 25%. Even in China, it's close to 10%. So India's slowly getting there as the awareness grows, but it's sort of early days in terms of awareness. So I think that's the biggest opportunity, and which is where overall as sort of more players adopt this, more of a regulatory regime comes into place, I think that awareness issue also becomes lesser and lesser of an issue. And I think once you start investing, I would say it's maybe 60-70% of folks today are direct, like DIY investors. They do their own research and buy. I think the younger folks by default are tending towards being more DIY. But on the sort of older generation, it does still tend to be folks wanting advice, and that's where building something of a portfolio creation, construction, funds as a product, ETFs, all of those help out.
So one of the things you just touched on was the aspect of regulation. And I know from an outsider's perspective, we've been seeing the regulatory environment in India changing quite a lot over the last even 6 to 12 months. So I'm curious your perspective on how regulation has shaped the investment landscape in India over the last 5 years, and then what you think the next 5 years look like in terms of regulation.
Yeah, I think over the last 5 years, there's been kind of some marquee improvements. One of the biggest has been that the government there were a lot of sort of gray areas in terms of what you could invest internationally and what you could not. Like, are funds okay? Are funds that are regulated or funds that are regulated to fund managers okay? All of those things were always questions. And while it was always, when we started the business, it was always allowed for an Indian resident to invest internationally there's a limit. You can do up to $250,000 a year per individual. But within that also, what you can or cannot invest in was there were a few questions on certain aspects, and in late 2022 there was this entire overseas investment regulation that came in, and I think that really helped our business, helped overall the industry sort of get clarifications on what individuals, what companies also can invest internationally. So that was one key moment, and post that also certain clarifications have come in which have been super helpful. So wherever there's more and more clarity that we get, it always helps us, because gray areas, we don't want to operate in gray areas unnecessarily. And so as and when clarity has come in, that's helped. Now what's happened over the last, I would say, 18 to 24 months is the sort of gift city coming up. And uh, for folks who may not know, gift city is basically a sort of a foreign currency denominated special economic zone, which is a financial special economic zone within India, and it has its own regulator, which is the IFSCA. And within that sort of regulator, there are different sort of fund management regulations. There's capital markets regulations. There's payment services. So it's actually quite a task to sort of format. This project's been going on since the last 15 years, I think. But now over the last 2 years, it's gained a lot of momentum. And within this jurisdiction, the goal is essentially to connect India to the world, so you can sort of have opportunities to invest internationally if you're living in India, or if you're living outside, you get opportunities to invest into India. That's kind of the mission, and very similar to what we do, right? So it's a jurisdiction that is very well suited for our business. And so now within that jurisdiction, there is a sort of framework that's come in, which is a broker dealer and a global access provider framework, which now has an India kind of regulatory layer to our business. If you want to provide access to international securities, you can get this global access provider license, and there's a local regulator that sort of oversees your activities. So that again has been another layer of clarity, because while it was always allowed for individuals to invest, for somebody offering this in India, there was no clear registration that was available. Now this has come in, and so we will sort of be moving under that framework. And for our customers as well, it gives you like a while we are already a US broker dealer, it gives you sort of an India regulatory layer as well, that they can sort of develop more trust with Vested on. So I think that's historically. And now in the next 5 years also, a lot of this is going to come out of Gift City in terms of access to the international markets from India, or the reverse as well. And yeah, there are a lot of different sort of there's an advisory regime that's coming up. There are new companies that are getting listed there. There are more and more funds setting up. So a lot of things happening there, and that's a space I would watch out for over the next 5 years, especially if you're doing a business related to cross border and related to India.
I'm curious. One, you mentioned Gift City is denominated in a foreign currency. Is that one specific currency, and if so, which one?
So it's actually expanded the list recently. Last I had checked, it's 9 currencies. So it's across USD, GBP, Euro, Australian dollar, Singapore dollar, Hong Kong dollar. So you can hold essentially any of these currencies if you're operating there, or if you're a customer of one of the market entities there.
Interesting. And I'm curious as well about sort of the relationship that you've had with regulators in India. And I think in the US, we have a very established regulatory framework with the SEC and with FINRA. And it does feel like the rules are a bit harder to change. No comment on whether that's good or bad. But the rules are a bit more established and take a bit more process, or at least it feels that way from our vantage point, to change. But it does seem like the rules are changing pretty rapidly, or maybe areas that were previously gray in terms of Indian regulation are now becoming more well defined. So I'm curious what the relationship between industry and regulators looks like in India.
Yeah, I think I'm not sure of like how different jurisdictions operate and how sort of different regulatory regimes operate, but at least in our experience, we've always had a voice in whatever regulations are coming up. And especially in new areas, there's always kind of some or the other consultation that does happen, so that there is a dialogue, and of course at some points the regulators draw the line, and you have to then accept what it is. But uh, so far it's been sort of helpful to engage with regulators. Newer areas, I think, like newer areas require more dialogue. I think that's why it ends up being a lot more back and forth. But otherwise, if it's an established area, and like the US markets have been for a long period of time, I think there things are way more set, and lesser kind of changes that are needed.
That makes sense. I want to move on to sort of the third topic of discussion, which is really the topic of private markets. And we've been very excited to work with Vested and the team on bringing pre-IPO companies, pre-IPO SPVs to customers of the Vested platform. But I'm curious what your view is on the role of private markets in India, and how private market access fits within Vested's growth strategy over the next 3 to 5 years.
Yeah, I think. I think, especially if you're considering international investing from India, I think private markets will become more and more part of one's sort of portfolio strategy, and largely due to the fact that companies that are going public in the US are going public at like super high valuations, right? Like, what is it for SpaceX? It's 1.75 trillion, I think. Oh man. So I all of that growth you get left out of, right? And I think more and more of that is happening, especially in the AI space, with companies needing more capital. So it's just by the time you get access to it as a public investor, it becomes too late. And a lot of the value, what is it? I think I read somewhere 10 trillion in terms of unicorn valuations that are locked. So you just don't have access to 10 trillion worth of value at all. And it's just, I don't think there's a strategy that can afford to ignore this, if you're looking to create a global portfolio. So what we do see folks now on the platform doing is maybe allocating 20-30% of their international investing strategy. So it of course, you need to be a sophisticated investor. Just somebody starting off with a smaller amount doesn't make sense. But as you get to a certain size of portfolio, allocating a certain amount to private markets, it helps with lowering the volatility also of your overall portfolio, plus capturing themes, opportunities that otherwise you don't get, or you get too late by the time they go public. Another thing is also, you can't really invest in IPOs, right? So you can't access US IPOs the way in India. Otherwise, you can get access to even at least the IPO. So by the time you get access, it's already gone public, and then your first trades have already happened. So it becomes too late for these large companies, and that's why, again, also I think private markets comes in and plays an important role.
Is the limited access to IPOs a regulatory constraint in India, or just the way that allocations in IPOs get broken up, very little is remaining for Indian investors?
Correct. I think it's more it's more on the US IPO structure side, right? I think because a lot of it is driven by institutional investors, and retail in general is gets very less. And by the time somebody like a platform has to get access to that IPO, right, which is quite a task. So from that standpoint, just access to good companies in the US going public becomes very limited for our customers.
Yeah, that makes sense. I mean, we're seeing that today with, platforms like Robinhood and many of their competitors competing to get access to the SpaceX IPO, which actually, at least the headlines are reporting, SpaceX does want to allocate a lot of their IPO to retail. But even then, these platforms are, it's very competitive to actually get an allocation in the IPO. So I can definitely see how that extends, or maybe is more difficult for an international investor base to be able to get access as well. I'm curious the difference in your view between private markets in the US and private markets in India, which I know is something that you've been thinking about a lot. What do you see as the core similarities and maybe the core differences between the two?
I think, one key difference is kind of the private fund ecosystem in the US is quite evolved, right? In terms of the at least the overall regulatory framework, and I think that now is starting to come in the private markets in India. So currently, a lot of it tends to be just kind of individual broker transactions that you might end up doing, versus sort of the private fund ecosystem in the US. I think has helped at least get some comfort from a regulatory standpoint, provide a structure as to what you can do, cannot do. So I think that's been one key difference, and I think otherwise, just the liquidity is another key aspect. In the US, I think more than 100 billion was traded secondary in the last couple of years. So it's still possible to get liquidity, even though it's challenging in general in the private markets, but relatively more liquid, I would say, versus kind of domestic private markets. But I think that will also evolve. I think it's sort of a space that people are interested in, but evolving in the domestic markets in India.
Super interesting. Viram, where can people find you today if they're interested in learning more about Vested?
So just our social handles are all Vested Finance. You could also visit vestedfinance.com, or just go to the App Store, Play Store, search for Vested. They can find us there. And they can always reach out to us at our help@vestedfinance.co email, and we would be super excited to help and answer any queries.
Amazing. Well, Viram, thank you so much for joining me on Capital Connect. It was great to have you, and I really enjoyed this conversation.
Awesome. Thank you for having me, Ben.